Ladies and gentlemen, welcome to the Fintech Friday show. In today's video, we have some SOFI to talk about, as Steven is a trader and a hater of one of the greatest American companies. Hoorah! But no,
did you just say what I think you said?
Sorry, what's that?
I'm shocked.
What would you prefer to buy? Block?
No. That's not what I'm talking about. The sound you just made.
Oh, yeah. Canadians are not allowed to make that noise. I'm sorry, guys.
I
think I lost monetization. I think YouTube's going to come after my contract now. But how are you guys? Roy?
It's good. Good week. Lots of interesting earnings. Some interesting non-SOFI stuff. Not a lot of SOFI stuff this week, but yeah, but still busy season with earnings, personal life stuff, but glad to be here with you guys.
Nice. Glad for you to be here with us.
And I won't be here next week, so it'll be nice to get away for a little bit. So taking a little mini vacation.
Yeah. Tevis? You're always on vacations, different yachts and stuff like this, but yet you're with us here tonight. How are you?
Doing well. Happy to be here. It's been a long week, dude. I feel like it's been so long since we last chatted.
You sound depressed.
I'm
not on the water anymore.
What?
He's not on the water. He just came from Monaco. It was.
Oh my gosh! Shut up.
The pictures were nice.
What did you make off of hymns? What, like 1.2 billion?
But speaking of hymns, Steve, did you end up actually buying when you said you would on Tuesday?
So I said I was getting lukewarm on it.
No. That's not what you said.
He said he's going to buy tomorrow, but
yeah.
So I have a plan, and I am going to become a shareholder. I'm just not a shareholder yet.
It's amazing.
Puts, cash liquid puts.
But in full disclosure, I did write a lot of SOFI contracts.
Covered calls?
Yes, I did.
I mean, I have a bunch of those too.
What date and what strike are you on?
I have June 6s for 16.
All right, I got to do 18 then.
Ooh.
I mean, I posted about this on X, but it's in my portfolio where I write, I run the wheel, because I was doing cash secured puts on SOFI at like $13, $12, $11. So I built a sizable position, and now I'm writing covered calls on those shares at 16. Let me see if I made the post this week about it. But yeah, it's not. I don't think it should come as a surprise to anybody. Like, I've been doing this for a good chunk. Yeah.
So I put my entire position at risk.
Jeez.
For
So
what strike?
I went June 13th. Let me clarify. I didn't do any cover calls in the joint account, but there's that's not a big position. So
Yeah,
my personal position, June 13th, because the Fed meeting is on the 18th. So 1 week before, I had a 15 strike, and I got paid. I want to say I got paid 35 cents a share.
And you said 18 strike?
15.
Ooh.
I said if it closes, he's probably not going to roll it. He's probably just going to sell out at this point.
I mean,
I don't think it's getting there. And the reason I picked the 13th is because it's a week before the Fed meeting. So if Powell decides to, and if the shares do not get called away, I will not be writing another set of covered calls until after the Fed meeting, because if he cuts, I think
what are you showing here, Roy?
15 or 16.
It's the share price, in case people are like, wait, where are we at now? 13, 14? Like, it's not that far away. And you can
it's a fairly big cushion.
Yeah. You got what, like 20 cents on those, Steve? 25 cents?
35 cents.
Pretty good. Yeah, it's pretty good, man.
Pretty good
I got 11 cents on the 16th, but that was like playing it more safe, right? Because I think the delta on that was like 11.
Yeah. So
But because it's such a low premium, I can't really sell out of them because you give up so much in like fees basically because it's such a low stock price. You know, if it's 11 cents, it's going to fall down to like 5 or 6 cents. You give up 1 cent basically in fees. So I'm just going to let them ride, and if they get hit, they get hit.
and Tanner, I did the entire position on NVIDIA also for next week.
Ooh. What
And
strike?
Here's why.
What strike?
So I'm not flying that close to the sun.
Entire position.
Dude.
So May 16th, 128. So I mean that's
Don't they have earnings next week?
no, the 28th.
Oh.
So here's the logic.
Dude, that would be crazy.
Yeah, that would.
So here's the logic with NVIDIA. So 128 strike. I don't even remember what I got paid. It was, I don't like giving out bad numbers. I feel like it was like $1.40 per share or something like that when I did it. I gotta go look, but it was big enough where it was worth it. And the way I'm looking at it is it's the 16th, 2 weeks before earnings. I don't think it gets there. And if it does, I can roll for a week. But I will not be writing another. I shouldn't say that. We got to see what it does. But I don't think it's getting there before earnings.
Yeah, the nice thing about doing that the week before earnings is you can roll pretty easily that next week. That's what I actually did with Palantir. Is I sold some covered calls that would have gotten blown up, but I did it a week before earnings, and so then I was able to roll them out to 132 and actually bank some premium. And yeah, they're fine.
So I have a cash pile freed up, and I'm gonna do cash secured puts probably on NVIDIA, so that I can, if I get hit on those, write covered calls over earnings for those same shares, and just pick up some extra premium there. And I don't care where it goes, right? Because I'm buying them on 1 week through cash secured puts to sell them on the next week through covered calls. So we'll see how that goes.
I know that this is FinTech Fridays, and we're already getting not even off the topic of SoFi, but off the topic of FinTech. But man, the news rolling in for NVIDIA, I
can't wait.
I cannot wait. Did you see the TSMC April numbers?
Do you think I didn't make half my decisions based on what they put up?
Yeah, but I mean, I ended up buying a bunch more NVIDIA this week too.
In addition to every one of the big four, and I'm not talking accounting, not cutting CapEx and Zuckerberg increasing CapEx, there's only one way for NVIDIA to go, in my opinion, and that's up.
Well,
yeah. Dude, TSMC put in their April numbers that they grew 48% year over year. If you look at their quarterly numbers, that's faster than any amount that they've grown. So
NVIDIA cannot produce chips quick enough. Every chip they produce is sold.
I know. So if TSMC is ramping that,
exactly,
there you go.
Yes.
I mean, I don't know. Do you know what the percentage of my portfolio is now, Steve, in NVIDIA?
It's like 47% or something like that.
No. Just breaching 40, but yeah.
Yeah. I mean, look, NVIDIA could go down on earnings. I doubt it does, though. It has gone down the past 2 quarters on stellar earnings. I think they put up stellar earnings again and raised guidance. And the forward PE is going to look even more crazy.
Is that the clip I think it is, Roy?
Yes. I'm kind of curious if this also factored into you guys, being as optimistic and bullish too on NVIDIA and other stocks as well. I ended up buying.
I didn't even see that. What happened?
No, it's my financial analyst.
It's quant. Yeah, it's basically our financial analyst saying buy the dip.
You better go out and buy stock now. Let me tell you, this country will be like a rocket ship that goes straight up. This is going to be numbers that nobody's ever seen before. That's a very important element of all of this. If we get that. If you don't, and the Democrats are fighting it only because they want to fight. They have Trump derangement syndrome. If it was somebody else.
That's kind of past the part already, but it almost seems like artificial intelligence. That's a real clip. It's going up like a rocket ship.
So can we address one question before we get to FinTech?
Yeah.
or one statement that was made. So somebody said, why do you think Big Four CapEx is going to NVIDIA, Big Four developing their own chips? So I know I've talked about this in the past. I think Tanner's talked about it, but the chips that Amazon is creating and the chips that Alphabet is creating are more processes in their cloud. It's not really for generative AI, it's to manage workloads. And they're still buying every chip they can get their hands on with NVIDIA. And when you look at what OpenAI is doing and what Grok is doing, the amount of chips that they say they need, every last chip that NVIDIA produces is purchased. And when you look at the comments that Jensen is saying about inference and how much better the next generation chips are, these companies are in a prisoner's dilemma, because if they don't buy the latest chips from NVIDIA and the competitors do, they fall behind instantaneously. So all of them have to come to an arms agreement and all stop, or none can stop. So NVIDIA is at a point where they have no competition at this point.
Yeah, it's very much like the Tesla situation, right? Whenever EVs were first starting to boom, like the other chips that these companies are making, like their custom silicon, are like all of the prototype chips or all the prototype EVs that were coming out that all sounded great on paper. And you know, maybe some other, like the Trainium 2 or stuff like that. Think of that like Lucid or something like this. But they still, none of them hold a candle to the size that Tesla is operating at. And the more vehicles or the more chips that NVIDIA sells out, then, you know, even better or furthers the distance between them and their competitors. Like Jensen recently just said, he's spending about $30 billion a year on R&D. It's very hard to replicate. This isn't like, there's no AI software team that can come in and try to replicate what they're doing. They're making like 3-ton chips. Or, no, sorry, I should have said, well, anyway, you know, with hundreds of thousands of parts that they have to, you know, completely assemble, test, disassemble, ship, recreate with like 200 different manufacturers. And then freaking, it all has to come together for these clients. It's super hard to replicate.
Not to mention the software stack that they're implementing. And
Right, which, because they're their own, you know, architecture, the companies have to develop directly for NVIDIA. And whenever that happens, you're not developing or working at the same level with those other chips. And so it even separates the software gap as well. It's really crazy.
I agree with you guys, you know, buying NVIDIA, but the Trump comments, this is the second time he said something like this. Did that cause a reaction for you guys at all?
I haven't bought any NVIDIA in the past couple of weeks, so no impact.
Yeah,
It wasn't an NVIDIA comment. It was just a
all stocks.
No, I haven't really added, so no.
I bought stuff this week.
I took about 4 weeks of I have a slow I have like a DCA no matter what in 2 positions, but I have allocations that I had planned out for a month, the next month, and I'm like, I'm just gonna do those now.
Probably not a bad idea.
It sounded, I mean, like, it's not really insider trading when you're doing it that way, and you're like, hey, entire world, you should buy stocks. Like, it's not ideal. It's still better than like what Lutnick did, you know, saying buy this specific stock, Tesla, you know, a couple months ago. But yeah, I'm like, you know what?
Yeah, he'll face zero ramifications for those comments. He did nothing wrong. It's definitely weird, though.
I mean, think about it. Oil is under 60. Oil's been trading 65 and lower for a while now. And if oil stays between 55 and 65 for the next couple of months, you're going to see real ramifications throughout the economy with lower input costs, lower transportation costs, lower fuel costs. So we may see inflation go to a level where the Fed really does start and not stop cutting for a couple of sessions. And we may get 75 to 100 bips off the Fed funds rate this year. And if that happens, the market's going a lot higher.
Yeah, I think the weird part about the comments is that 50% of the population owns no stock. Well, no direct personal stock. Maybe they do through work or something along these lines. But
Well, they can go and buy now.
yeah, but they can't because they're heavily in debt. It's not that they don't want to own stock, and I mean maybe that is true for the some case, but I'm sure 100% of Trump's friends own stock, own property, but a large percentage of the American population has no property, has no stock, and is actually in negative equity.
Like I think with Trump, I mean the administration and all administrations to some degree, it is like a propaganda campaign where they divert whatever is happening, they spin it as a positive. Like I remember a few weeks ago that Scott Bessent came on TV and he said, well, actually, 90% don't own stock. So we're doing what's best for the rest of the country. And now that it is, going back up, he's using the stock market as a proxy to demonstrate American strength and American health. And so it's just like, it's very flip-floppy in terms of how they talk about it. That's why I don't really read into it that much.
Oh, you had to at least assume something like that was going to happen, because you can't have the market decline that quickly and sustain that unless there's a real recession or economic downturn, which there wasn't currently. Maybe we get there, maybe we don't. But too many people were getting angry. And he knew that it was all because of what he was saying. I mean, if he didn't reverse course to some extent, we wouldn't be at the levels we are right now. The market wouldn't be rebounding like this. And let's see what happens. But I mean, it was pretty easy to see that we weren't staying at those depressed levels. Maybe we don't hit 6,800 or 7,000 this year, but to think that the market's not going to be up this year is kind of crazy when you think about having to head into midterms with a market that is worse off than when you took over. I mean, that was never in the cards for me.
Yeah.
Do you guys want to go more towards fintech?
Yeah, go to SOFI.
Was there SOFI news this week?
Well, I went through the 10Q. Same way.
Yeah, yep.
And look, I put out an article today, and I'm still optimistically bullish on the company, but the tech platform is still a headwind for me. And after really going through it, I'm worried because when I look at the premium on book value, they have a larger premium than JP Morgan. And JP Morgan grew their net income by over $8 billion last year. Bro, which is more than triple the revenue that SOFI generates in an entire year. So they need to do something with the tech platform to justify this valuation and get a bigger multiple.
You're talking about the difference in book value between them and JP Morgan. Who has a faster growth rate?
I knew you were going to say that.
By like 10x.
Hold on. What did SOFI grow its revenue by? Year in Q1?
34%? 28%?
33 or something, 33, 34.
Think about this, Tanner.
I think those members.
JP Morgan grew their net income, bottom line, last year by almost 9%, over $8 billion. All I'm saying is financial companies are valued differently because you're buying a book of assets, because they are taking from their balance sheet, lending, and generating net interest income. They're always valued off of book value. And SOFI has a higher premium than JP Morgan.
Yeah, because it's growing faster.
But it's not always about growth. Sometimes it's about the fundamentals, and sometimes it's about profitability.
Yeah, but the profitability is growing faster at SOFI as well.
Sheer numbers.
Nope.
Getting a valuation of 127 or 129% on book value when JP Morgan is around 121%, and you look at the net income generation growth, it's going to be very hard for SOFI to get past where they are without really transitioning to a tech company.
Okay, so you said net income growth. What was SOFI's growth?
On a full number.
Full number does not matter.
Of course it does. The JP Morgan grew by over $8 billion of net income.
Yeah, I know, and you're paying $600 billion for the company. You're paying $600 billion. They're not both $20 billion businesses here.
All I'm saying is that the multiple.
No. See, whenever I catch you in a corner, you say all I'm saying is
anything. The book value for SoFi is what, 620, 615, something like that.
Yeah, I mean, I look at tangible book, but yeah.
Okay, so tangible book's even lower. It's like 598 or something like that.
Yeah, it's like 5-some billion.
All I'm saying is, when you're tangible book and book value, and you're looking at tangible book, that is a metric based off the balance sheet, assets minus liabilities, because they're lending off the balance sheet to generate net interest income off of loans. All I'm saying is that the premium is already in the triple digits. Most banks and financial institutions, JP Morgan's the only other one that I know of that trades in the triple digits. For them to expand that multiple, one of two things has to happen most likely. They need to increase tangible book value at a rapid pace, or they need to increase profitability. And in order to do that, they have to grow. I'm just saying that the tech platform is the vertical
What does
that
that
allows
mean?
them to break away from that metric and not be looked at as a bank and not play by those rules.
Help me understand. So in order to grow in profitability, they have to grow. That's what you said.
Yes, they have
What
to
does
grow.
that mean?
But in order to not play by those rules, the tech platform could take that whole line of thinking away and give them a much bigger multiple with still having tangible book value under 7.
I love how you guys make these arguments week in and week out, like the market is actually like efficient, and it's not just a bunch of degens trading on future expectations of what
That's
they
not
think
true.
the growth is going to be. That's
Oh,
absolutely
it is true. Look at the amount of leverage in the market.
Yeah, that in the short term, things can get disconnected from fair value.
Okay, answer me this. Of all the people who bought SoFi today, retail institutions, everybody, how many of them, just your gut, how many of them do you think give a shit about the book value?
Well, I think more than you think.
No, like, as a percentage of total is what I'm saying.
15%.
I'd probably even say lower, but even 15%, like, you know what I'm saying? It's not, there's, like, for example, HIMS issued convertible notes, something that SoFi did. They did a cap call transaction as well. And then 24 hours later, they said, we're oversubscribed, and they're doubling their offering for their convertible notes, $870 million. Remember what SoFi's reaction was when they did that? The stock fell like 15%. HIMS was green on both days. And it's a different company, Tevis, different prospects, whatever. My point is like the same news is digested by different companies differently. The market is not as efficient as you guys make it out to be. And so if you guys compare like intrinsic like book value of one thing to not, like, no, I don't know. Some people are absolutely looking at that, but the vast majority of people, I think, are looking at different things. I think SoFi as a stock is not that interesting. So it like,
man,
is not that.
I actually think that
I agree with you. My argument is just that to break out of that shell, the tech platform could get them a much bigger multiple. But I just don't see it happening without tech.
I couldn't disagree more with these comments. I think that whenever people start thinking this way, this is whenever they start making mistakes. And if, let's say, Warren Buffett or any legendary investor were to look at this company, do you think that they would look at it in terms of sentiment, or would they look at it through the value, or like through the value of the actual company? Now name
one other investor, Tanner, that is like Warren Buffett, that has a buy and hold period of forever. Ben Graham is not around anymore, man. You have people like Druck and others who like swing trade things back and forth, completely riding momentum. That type of investor is a dying breed, bro. And I don't know.
I completely disagree.
Sure.
I completely disagree. And I actually think that it's the system is designed in a way where you are supposed to lose. Like, this is how Cathie Wood ended up losing to Warren Buffett, is that, you know, she caught a really good high on a few good stocks, and then everyone went, Warren Buffett's dead. He missed the whole COVID wave. And then as it came crashing back down, he continued to win again. Now, I do think that he, through his age, had discounted some technological advancements, like, you know, crypto, for example, or blockchain, I should probably say. But I think that you know, in terms of picking great companies and holding them over the long term is still by far the best way.
I don't disagree at all. At all. But and,
Yeah,
and
but
we're actually way more similar than we are dissimilar, because the reason I buy SoFi today is not because of book value. It's because what are their prospects? Are they still executing against their vision? Has the story changed? And what's their growth rates? And at a high level, I think more investors subscribe to that forward-looking notion than the actual, like, what are the metrics by which you determine the comparative value of two companies that are very, very different from a market cap perspective, from a product offering perspective, from, like, you know, all the way down to verticals.
Well,
So,
I agree with that.
Yeah, exactly. So my point is like, I don't need to look at SoFi's book value to tell you confidently that SoFi is undervalued, because I can just look at their growth rate, and I can look at their prospects, and I can look at what the management is saying on the earnings calls.
Steve is saying the opposite here.
Right. So my point is like, I think to paint the narrative around the reason why SoFi hasn't moved is because, you know, book value is not as attractive as we might think compared to JP Morgan. Like, nobody is making that comparison. Nobody's looking at like, oh, you know, I want to allocate some money in the banking space. Should I look at SoFi or JP Morgan? Like, nobody's doing that, dude.
I think if you read analyst comments, I think a lot of them are doing this. I think a lot of
They're
the
not
lower
ones
end
buying stocks.
What?
Analysts are not the ones buying stocks.
Yeah, I think that this is another thing that retail does, is they discount the comments of analysts too often. Now, I don't bet on their comments, but you have to realize that institutions are, and that they're not paying these guys millions and millions of dollars to take their
institutions literally every single day go against the guidance of their own freaking analysts. Like, JP Morgan buys and sells completely opposite to what the JP Morgan analyst says to do. Like, I don't, like, it's not like, oh, Reggie Smith said buy SoFi and JP Morgan's like aping into SoFi.
I think it's more correlated than you think it is. They're not spending millions of dollars on analysts for no reason. You know, they go through those research reports. I know a lot of people think that this entire market is rigged and that it's all algo based and all this stuff. I think it's utter trash. I mean, maybe on a day-to-day basis, the fluctuations can be looked at as this, but like, what is it? Something like 84 or 85% of all money in markets were generated by dividends. You know, so it's not a win-lose game. It's a win-win game because the companies are paying more into the market than humans have. And like to buy, I don't know. I feel like I'm talking myself into being a value investor here when I'm not. But I think to say that people aren't looking at SoFi very deeply is not true.
It's not.
I think a lot of people do really great research.
No. You can look at it deeply without hyperfixating on traditional value metrics. Like, the valuation is only one side of the story. You can have a really cheap valuation and be declining every year, and you will lose that money that you invest in that company. Guaranteed. They're called value traps. Valuation is one side of the coin. Growth is the other side of the coin, right? And I think that the SoFi's story right now, at this point in time, is more like the excitement around it is not the cheap valuation, I would argue, although that's part of it. And more so, the story is around the growth prospects that it has, the accelerating growth for the loan platform business, and where the company is going back into growth mode. And that, I think, is the thing that is compelling more buy-side investors than the valuation concerns.
And Tevis, I agree with that, but the problem...
That's all I'm saying.
No, and I agree with you. The problem is their most exciting thing is the loan platform at the moment, which is more traditional finance company, which is why I keep harping on they need to get better with tech, show more with tech, and start boosting the revenue from tech. Otherwise, they will be pigeonholed into the finance sector that unfortunately is looked at as a low PE sector and trading off a certain percentage of book value.
Steve, the sad reality is that the tech segment of the business is the longest feedback loop of SoFi's entire ecosystem. They cannot change the numbers for next quarter for tech because that has been, signed and delivered 6 months ago or whatever that may be. Like the deals have been inked back then. And the feedback loop is so long that the best thing they can do for you right now is sign deals that you'll see the revenue manifesting in Q2 2026.
Agreed.
And so
But they're not even giving us a fragment of
Sure,
what
I agree
they're
with
doing. And that's the problem. We don't need to monetize it today, but we need to see a roadmap, and they need to play this up, because the AWS of fintech is what's going to get them out of being a finance company. Nobody's looking at Robinhood as a finance company. People are looking at Robinhood as a tech company. Robinhood's got a bigger multiple. All I'm saying is that SoFi's current multiple on traditional finance valuation is stretched. And to get a multiple that everybody thinks it can get, it needs to shed that and be looked at as a tech company. And there's only one way to do that.
I disagree. Everyone talks about tech multiple, and someone brought it up in the Discord. What?
Have you seen Palantir?
Yeah, but that's a single. You can't say another name that even remotely. Is Google not a tech name? Where's the tech?
Tesla? Tesla gets a crazy multiple.
Where's Google's tech multiple? Where's Google's tech multiple? They're lower than the S&P 500.
What sector is Google Alphabet in? It's not tech, it's communications, sir.
Yeah.
Just saying. But look at Shopify. Like, companies get much bigger multiples being associated as tech, not finance. Like, that's something that you can't debate. It's a fact.
But like realistically, why do you care about the multiple right now? If you weren't going to sell anytime soon, like wouldn't you want it to have a low multiple so it's undervalued so you can just keep accumulating because you're investing for the next decade?
I want to know that there is a plan and that there is a real possibility that this becomes the AWS of fintech. Because if it doesn't, I don't think that this is going to do what we think it's going to do. Like, that's the whole reason why I'm in SoFi right now, is because I believe that they can pioneer banking as a service. They can become the AWS of fintech. Honestly, if I wanted to own another financial institution, I'd be buying Citigroup, which I am buying right now, or I'd be going with Ares Capital and begin paying a 10% dividend. Because we want to talk about loans. Business development corporations are a lot more exciting for loans than SoFi.
So the multiple is something we've talked about a lot. AWS of fintech, I'm not sure if that's happening or not. Tech platform, I'm with you on that, Steve. Loan platform business is crushing it. Incredible financial services. I don't think that they need the AWS of fintech thesis to play out for a pretty great upside. So I continue to be in SoFi as a result. But we've kind of rehashed this a number of times, guys. The market's going to do what it needs to do, and it can ignore even profound shifts in businesses for a while. I've seen that across multiple companies, and when it gets it, it gets it. The biggest short-term price driver is narrative, and for whatever reason, SoFi has not captured that yet. So, but is there any other SoFi news? Because rather than spend the whole hour rehashing this, I'd like to get into
only the theory about, Amit told me who started it, so. Have you guys heard the rumor mill that's trying to be started now about SoFi? It's like the most ridiculous thing, but when you think about it, it makes sense that JP Morgan should buy SoFi and put Noto right under Jamie Dimon and have Noto run the whole thing when Dimon retires.
Yeah, Jeremy was saying this. Jeremy made a video. I think he was saying this. I don't think it's going to happen.
I'm not saying it's going to happen. I'm just saying that at first I laughed. And then I started thinking about it. I'm like, that's actually not a horrible idea.
Yeah, I mean, my pocket pick for who buys SoFi is Goldman over JP, because there's way more connections that tie it to Goldman there. But yeah, I understand the Diamond succession thing, but I don't think they feel the need to buy an entire company to have a successor for Diamond.
Oh, great. At least with Berkshire, we knew who we were getting.
I think that Goldman has taken a few too many swings at consumer banking that I don't know if they would want to do that again. But what's this, Roy?
Short interest update. I'm moving us on.
I
Because
have a
we
bunch of
rehashed all that before.
I have a bunch of SoFi news from the 10Q.
How
Well, yeah,
is
and let's go through that too. But yeah, 13.66% short interest, still high. I don't understand why it's not crazy high, but I don't know. Bears are seeing something other than what we are. Maybe it's just narrative driven, hedge. Who knows?
Roy, is it true that HIMS is up to 34% now?
Yes. Well, as of April
Insane.
3rd.
62 million shares sold short.
I can't find a single red flag there.
Well, the crazy thing, Steve, is that that short interest report came out one day after the Novo partnership was inked. So those people absolutely got burned. Yeah.
But even before that news, there was no news, though, in my opinion, unless people really think that they're going to lose one of these lawsuits. I mean, this is not a company you start shorting unless I don't know how to read a financial statement. There's no debt, profitable, triple-digit growth year over year, and an expanding moat or expanding business. The short interest doesn't make sense.
Yeah, it makes even less sense than shorting SoFi back in the day. Like at least there you could say, well, hadn't been profitable a full year and growth had slowed, but like it was still weird. But you know, the market and also those that are shorting it get it wrong from time to time,
Yeah.
and that's really our alpha. Now it can take a while. It hasn't for HIMS, but it can take a while for the market to realize, oh, it's messed up, and also for those shorting it too. Like once upon a day, Palantir never had like ridiculous short interest, but there were times when it was in double digits, and like it's sure not anymore, even though it's really climbed up a lot, just because too many people have been burned and they realize the quality of the company that's there. So things can shift, and when the narrative shifts, that provides a lot of upside. That if you're in earlier and you've waited, you've been patient, it's a quality company, man, it's great.
Let's talk about a boring bank real quick. Take a look at this total loan sales for SoFi just from Q1 of 2023, whenever they sold only $77 million worth of loans, to this quarter where they sold $3 billion. And if you want to tack on the loan platform business, which is all loan sales, they did $4.6 billion of loans sold in this quarter. I thought that was a pretty interesting chart, bringing to all-time highs. Cost of funding got better. So although their average interest paid went down, the cost of funds went down even lower, and it looks even better whenever you include default. Credit cards was really interesting. Spend on credit cards was super awesome. The interest or the default rate on credit cards dropped super low, 9%. So still high. You really want to be in a range between 2 to 8%. That's normalized. 9% is just out of that range, but the trend is looking great. Okay. And finally, we're actually starting to ramp up credit cards. And even Steve will admit, credit cards are a very highly profitable business. One that gives JP Morgan such a large multiple as well, because they have, I think, the largest credit card issuing in America. Yeah, the debt per customer on credit cards went lower. They skyrocketed in the amount of credit cards. That was all great. FICO was a little bit weird, but it's not too big of an issue. Yeah. Companies growing over time.
And one of the things that I thought was most exciting about SoFi is like when Lending Club came out with their earnings. They're a near peer, at least with relation to their lending side of the business. Several others reported as well that have some overlap, and they just weren't good quarters. And SoFi is killing it. So, if everybody's just thriving and SoFi is one of those, it's like, hey, that's cool. But when they put up a really, really good quarter and everybody else is like, yeah, it's okay, or it's struggling. And we saw, some that they don't have nearly as much overlap, but there's a little bit too, Affirm, Block that had some weakness as well, a lot more than SoFi, but really that Lending Club. And how about that pair trade, guys?
Yeah, seriously.
I don't get it. I don't get it, and I don't get how the guy that suggested it and reiterated it a couple of times still has a job, because whoever had
He
done
doesn't have
that,
that job.
yeah. What's that?
He doesn't have that job. He works for another institution now. He doesn't cover SoFi anymore.
Well, that's probably a good thing for him.
Did they ever replace him on the Wedbush side?
Not that I know of. Or well, like I just don't know the person. Maybe they did.
Yeah, it seemed like it was somebody that was fairly new and just didn't know what they were doing, and they put out something bold like that. When I kind of did a little write up on X, that pair trade they'd be down over 70%, not even including the short interest that they'd have to be paying. And I looked through, and outside of like options or pair trades, it just didn't work out. Like if you took the worst performing stocks, other than like micro caps, like even biotech, which is just slaughtered, you would not be down 70% from October when that was initiated. So it's just like, congratulations on destroying people's money. Anybody entering that was an absolute moron. I'm sure Lending Club will be fine, but it's not SoFi. And like pairing the two against each other, if you're going to do that, I think it's dumb. But if you do, go long SoFi, short Lending Club. I think it's a mistake, though.
You know what? The people who supported that trade, all the different people on X or the Wall Street guys or everything, were all the people that compared SoFi and Lending Club via their book value.
It's the wrong measure. It's a wrong measure.
I have a little bit of broader fintech stuff here that I think that maybe would be a little bit interesting. SoFi website traffic came in above 20 million, almost 21 million, but actually higher on a daily visitor perspective for April. So it's a new all-time high for SoFi for Q2. If you are to assume the similar trend over Q2, this will be another groundbreaking quarter. We'd probably see 800,000 plus new users onto the platform again. That'd be really interesting. Maybe not as many as JP Morgan. No, I'm just kidding. Robinhood's website traffic, a little bit down, but the next chart might show you why. Crypto is really down.
Or is it?
Sorry?
Or is it?
Well, yeah, okay. So crypto, traffic to these businesses is lower. Bitcoin's doing great. But yeah, so Robinhood took a slight dip, but then the companies that are fully focused on cryptocurrency took a larger dip. Nubank doing its thing, skyrocketing right now. Love it. Block, not so great. Cash App is looking sad here.
I wonder why. Maybe they have a leadership problem.
I don't know. I don't know.
They may have a leadership problem.
But do any of you guys look at Nubank at all?
Well, earnings are coming up,
Yep.
right? Okay, I was like, unless I've missed it completely. Yeah, no, I'm in Nubank. I actually bought more Nubank Thursday, maybe Wednesday.
Is that after the Melly earnings?
No, it was actually before, which is nice. It was after Trump basically said buy the dip, and I'm like, well, I'm going to buy more Nubank. I'm also selling cash.
He told you to buy the dip, and you bought a Brazilian company.
Dude, yes, dude. LatAm, like it's a long-term play for me, and I can. But there's so many vectors in Latin America that are working well. The Melly earnings, which happened afterwards, really showcase that, and Brazilian real and U.S. dollar, like that whole headwind that was that happened to him, and is the reason why the stock actually was trading where it was at. That's largely been alleviated over this quarter and going forward as well. So that'll rear its ugly head from time to time. But like they're well positioned. I'm even selling cash liquid puts into earnings too on that one. So, but yeah.
Sorry, I think they're at like an 8x book value.
Well, Nubank's not just not a bank. Why would somebody think that?
They are a bank. They're just a bank.
Nuevo Banco.
They don't even have a friggin' tech platform, Steve. They're just growing, and they surely don't make as much as frickin' JP Morgan does on absolute terms. You crazy person.
I'm talking about the amount of growth they have on absolute terms.
And
Yeah,
you're
see-
saying that JP Morgan's growing faster than
That's not
SoFi.
what I'm saying. What I'm saying is their net income grew by over $8 billion last year, which is more than triple the revenue that SoFi produces. And I'm comparing that to the premium on book value.
Honestly, I think that this might be smart for you. The only company that you should buy going forward is Apple because they have the biggest numbers.
We talk about the biggest numbers. Alphabet put up more net income than them.
Well, there you go. You should 100% your portfolio into Alphabet.
Wouldn't be the worst thing I ever did in my life.
I mean,
Some of the parts
you'd
on
have to-
Alphabet is worth more than what the company's trading for.
You'd have to sell your Pokemon cards for that. So,
That's not part of the stock portfolio.
I mean, fine.
Hims has really small numbers, by the way. It's like 500 million in revenue.
Over the year? You mean
You see
quarter?
where I'm getting at, Steve?
No, I don't.
Yes, you do. Yes, you do.
No, I don't.
This is live. You're being broadcasted right now.
Yes.
Bro.
So tell me where you're getting at, because I have no idea what you're getting at.
Oh,
Hims is going to be like, or Steve's going to be like, oh, well, Hims book value compared to Regeneron.
Hims is not a financial company.
Yeah.
Book value does not matter for companies
it.
that are not financial companies.
Love it. Yeah, bro. But buy Hims. That's what I'm waiting for. The world is waiting. All of our comments are just saying, "Where's
So
Steve?"
do you have more fintech news, Tanner? Because I do have one, actually maybe two fintech things.
I mean, the further fintechy we get, you guys are not going to care. Like, I don't think anyone wants to talk about Toast or
These ones we'll want to talk about. So
What is Toast?
Exactly. Carry on.
okay,
they're a
so
restaurant management company.
part of the reason why Bitcoin is going up is because that's what it does long term. But Arizona signed strategic Bitcoin reserve into law. It's the second state that actually passed this. This was actually, I think, on the 7th. Yeah, there it is, the 7th. It's very interesting. So, of course, Bitcoin is at 103,000 right now and climbing. It broke that 100,000 figure. Very, very good volume. So when I was looking at it yesterday, looks like it continues to have that too, which is, of course, good for Robinhood. Any thoughts on Bitcoin and where we're at in the cycle? Because one of the things that, I was really questioning 4 weeks ago is like, hey, is this crypto winter coming a little bit earlier than I thought? And right now, like, I don't think anybody's thinking it's winter at all.
I mean, I'm excited for things to get started again. I want crypto coming back. I actually just put out a video on Hood versus Coinbase. Did you guys see that video?
No, not yet.
No, but I know your stance on this. So
It's just crazy how fast Robinhood is taking market share versus Coinbase, and yet Coinbase operates in like 100+ different countries, and is bringing down their take rate. So, to be more competitive and everything like this. And it also is country dependent for Coinbase. So that's also important to understand as well. But
didn't Coinbase just close an acquisition this week?
yeah. Deribit, something like that. It's crypto options, crypto derivatives.
Now, speaking of Coinbase, I did want to discuss this too. It was very interesting from Bloomberg on Coinbase. Their CEO, Brian Armstrong, said basically that they were considering doing a Michael Saylor strategy. Did you see this, Tevis?
Yeah, they didn't want it, or they voted against it, or something to that effect.
Yeah, they decided against the gambit because it risked, it could have killed them potentially. So they built something that has survived multiple crypto winters. It'll continue to survive. And they're like, hey, there's a reward here, but it's probably not worth the risk. And so that's what they decided. And Teva, since you're the most degenerate, I was curious what your perspective was on that.
I think that just given the trajectory of Bitcoin on a yearly basis, yes, there is seasonality on a multi-year basis with crypto winters and crypto bull markets, but it would probably be a smart move for every major company to hold at least a small portion of their portfolio or of their cash on hand in Bitcoin.
Which they do.
Which, yeah, I know, but like, so my point is like my stance is generally pro doing that. Now, going the full sailor route and aping your entire, financials into Bitcoin, I understand why a company might not choose to do that, but I'm more like, if you have the spectrum of I'm never going to touch this thing, it's a scam, to let's go full Michael Saylor, I'm towards the closer to the sailor side than on the other side, but still.
Surprise.
Yeah. Well, I mean, look, I think Bitcoin is my third largest position. So, yeah, it's 15% of my portfolio. It's my third largest position. So that should give you my stance right away. If I were a company, 15% of all my capital would be in Bitcoin.
Can somebody make sense of something for me? Why on earth would anybody buy MicroStrategy instead of buying Bitcoin?
It's like leverage Bitcoin.
Yeah, it used to be, this was back in 2023 early, that the amount of Bitcoin that they had on their balance sheet was actually more than what the company was trading for. I don't know why. I think it was Jesse Dow that had pointed that out to me, and I'm like, huh. But I didn't like the strategy. There's risk there. And I'm like, it's easier buying Robinhood. So I just stuck with buying Robinhood as my crypto derivative, and of course, just buying Bitcoin as well itself. So,
my question is, if somebody wanted exposure to Bitcoin, why not just buy Bitcoin directly?
yeah,
Well,
I think
especially now that you have leveraged Bitcoin ETFs, like you can just buy those if you really wanted leverage in Bitcoin rather than, this was my argument with the miners too. Like, why would you buy a miner now that you have a Bitcoin ETF that's a more direct play and you can choose whatever leverage you want for them?
I literally think mining businesses are an investable asset. I've always thought this.
Uninvestable?
Uninvestable, sorry.
Agreed. Well, yeah, long term. Like short term, you can trade them, but yeah, they're
literally designed to kill themselves. Like,
yeah, new question based on what Tanner said. What happens in 10 years from now when the difficulty rate goes up by so much and there's so many less, because there's only, what, 1 million Bitcoins left to mine or something like that?
Mhm.
So how are these companies going to make money?
So
Well,
some of them have what they call the HODL, which is just them keeping Bitcoin there on the balance sheet, and they can at some point in the future loan that out to people that are wanting to. And then some are already building out their business so that they are building data centers, energy, buying private jets, all sorts of different things. But what that basically screams to me is it's a business that's looking for an additional revenue source because their current one is drying up. Now, not every acquisition that happens is that, but when it's very, very different than what their actual expertise is, usually that's a red flag. And I'm sure that some of these Bitcoin miners will successfully pivot and do very, very well, but
this is the answer. That once all the Bitcoin is mined, they will still make money from gas fees because they're protecting the blockchain.
But it's a lot less.
Yeah, but the gas fees, from what I understand about the settlement time, who's using Bitcoin to transfer money when you could use Solana or XRP or even a stable coin at that point? If Bitcoin is truly going to be a store of value because it does not have the utility of other crypto vehicles, then how are these mining companies going to be able to generate enough in gas fees to meet their monthly expenses?
But the way that like you talked about, the difficulty of the mining gets harder. It only gets harder if there's more compute power. So it gets proportionate as there's more systems trying to crack the code.
Right, but hasn't the compute power increased exponentially over the past decade?
Right, because it's still been rewarding. If that makes sense. Like if crypto's asset prices go down and then to mine those blocks would not be enough to sell and pay for the energy to, you know, fund the process of mining again, companies would stop. You know, the problem is that it's literally designed that you can't get ahead of it, because as you get ahead, then the problems get harder to solve. And then every 4 years, the reward gets halved. So the asset price has to continue to climb, but there's just better ways to play it.
What you're also seeing, Steve, is not only that, but a lot of miners, even as early as today, are changing their business model around how they make money. So a lot of them have moved to like AI, for example, as opposed to Bitcoin mining, and they're just switching their compute power to different problems.
Yeah, which is a shame, right? Because the chips that they're using are not necessarily good for that same process. So then they have to buy different chips that are good for that. But yeah, I mean, if they're good at running these freaking GPU facilities, then potentially they'd be good at running some sort of AI factory as well. That could be interesting. But to answer your MicroStrategy question, I think the interesting part, and I don't know much about MicroStrategy, is it's not just a holding company that holds Bitcoin. It's that they're offering debt on their increasing amount of Bitcoin, and then they go out and continuously buy Bitcoin, which people looked at as like some sort of Ponzi scheme or an endless money glitch or something like this. But it turned out that it obviously wasn't.
It's kind of crazy though, because like they are automatically opting in others into the Bitcoin standard by issuing the debt, and they have such favorable rates on the debt that, I mean, like when compared to Bitcoin returns, it's a drop in the bucket, but it's favorable compared to, you know, other debt instruments. And so they're issuing debt, and like, okay, if I want to buy the MicroStrategy debt and get paid in 5 years or whenever it comes to maturity, then like MicroStrategy is going to use my money to buy more Bitcoin, even though I might not be bullish on Bitcoin itself. But then the caveat there is like, you're also running the risk of MicroStrategy going under and being unable to pay that debt. But it owns all this Bitcoin, so you're fairly safe. It's a crazy business model.
Yeah,
it's a Tevis business model in that it's full degen, like not half degen, not a little bit, like full port.
Full port, yes.
Yeah, but the miners are actual terrible businesses.
They
genuinely are.
Yeah.
Like the way that Bitcoin was set up was to make no rich people. That like it would get harder that the better so there's zero operating leverage, zero, actually negative.
In what? In Bitcoin?
In the mining companies, because as the hash rate rises, as you want to take fuller advantage of the system, it gets harder to crack, and that the blockchain rewards cannot be increased. You're only getting a maximum amount of Bitcoin. Yeah. So it's legitimately the worst business.
Yeah, but I mean, if the mining difficulty wasn't there, like if all of a sudden the mining difficulty went down, Bitcoin would crash because like you would mine everything by the end of the year, and then you know.
Well, you can't mine everything within the year.
I know. I'm saying if the mining difficulty were not there and you could mine everything by the end of the year.
No, you can't. That's not how it works.
I know that's not how it works, Tanner. I'm just saying if in a parallel universe, if by the year 2026 the mining difficulty was not
the reward has nothing to do with the difficulty. You keep saying that if the difficulty was, hey, swipe up on your phone, the maximum reward would still be the same. The blockchain rewards is on a timer. There's only so much Bitcoin.
Yeah, based on the transactions that are validated in the ledger.
Based on a preset amount of crypto that can be released each day. What's interesting about blockchain is that it doesn't run on a human timer. It's its own timer.
It's not on a timer, Tanner. It's on a number of transactions per block.
Yes, that happens every 10 minutes.
Oh, well, I mean, not on Lightning, right?
Yes, on Lightning. Lightning is just fractional shares of something that happens every 10 minutes.
Okay.
So no crypto winner next week, probably. Yeah, this is really good for Robinhood, of course. SoFi will get into crypto at some point. Tanner, how's that quarter one prediction working for you for SoFi launching their crypto platform?
We're still on pace. We're hoping that in negative time that it still happens, but actually, let's go to this quote really quickly. This is from the 10Q. So this is a little bit new to us because it gives us an exact timeline. In addition to enabling members to invest in crypto coins, we will enter other areas over the next 6 to 24 months, but potentially much sooner via acquisition. Or if the changing regulatory landscape allows, our aspirations over time are as broad and deep as they are for the existing SoFi business, including developing crypto and blockchain offerings across borrowing, investing, paying, saving, and our technology platform services for third parties. Thoughts?
Yeah, loved it. Loved it. I think that was not even in, that was in the SEC filing, I know, but they had it elsewhere a little bit earlier too. And I mean, yeah, like this is confirmation of why we saw, I think 2 weeks ago, the hirings that were really ramping up for crypto. They don't need to hire that kind and that quality of people, that number of people, if it was just like, hey, let's dust off some old code and reissue our crypto platform. So there's a lot that they're doing and a lot that they'll be building out with crypto, and they want to be ready as soon as regulation allows them to. There's still some red tape there. It's pretty clear that there is, and it's a little bit of a mess. It's nice that it's a priority, and it does seem like it's a priority to update the regulation. But I think that SoFi will be ready once they actually have the all clear. But that is not going to come, as early as as you were hoping, Tanner. I'm not going to say we, because I said quarter 4, quarter 1 next year. It does. I do think that there's a chance that it even happens this quarter. More likely quarter 3. Could be a little bit later too. Governments tend to not move fast. So, but it's exciting, and I would love for them to be able to launch this during this kind of market instead of in the middle of crypto winter, because it'll still be there. It's good. It's not bad that they're doing this, but if it's in the middle of winter, it's going to get a lot less traction.
I was a little bit disappointed. Like I was happy to see a bunch of the crypto jobs that happened once they got regulatory approval, but I was actually hoping that they were sort of anticipating a change in regulation and therefore hiring a bunch of crypto people to work to create these things before, like, so then whenever they got regulatory approval, they would instantly turn it on. That was my assumption from SoFi.
That's what this is. They don't have full regulatory approval.
Yes, but it's still much later than I would have imagined.
Yeah.
I don't know.
Yeah, I expect with that. I don't know for sure, but I expect with that at least they were waiting for a certain level of confirmation that it was going to just be a matter of when and not if. And so maybe that came, from the OCC, and they wouldn't have to release this publicly, but as part of their charter, they had to get rid of the Invest platform. And so they might have been waiting on that just for confirmation and clarification. And they said, oh, yeah, you got to wait for the other hurdles too. But yeah, you guys are good to go. Okay, great. Let's hire some folks. But whatever they saw, they know, SoFi knows, and I think it's pretty clear in all of our minds too. It's just a matter of when, not if, which is really good. Like one of the very exciting things is going and seeing all these other companies that are talking about crypto and stablecoin, especially stablecoin. Like Visa was all over it, mentioned all over in their earnings call. MasterCard as well. A ton of other companies that are not crypto or even payments companies are mentioning these things too. It's an interesting time. And banks are just like all over it. So you got brokerages also that are not in crypto that are looking at getting into, like Schwab. That was last quarter. I think that they mentioned some things this quarter too. So the regulation has, and it is in the process of changing. It does take time, but there's a lot of companies that are on top of this.
Yeah. Steve, what else are you watching for in the markets?
Just big tech right now. It's so undervalued.
Yeah.
I mean, Amazon is arguably the deepest value play. I mean, if you look at SPYV, which is the Spider Value ETF, Amazon's the third largest holding, which is
What
crazy.
What are your thoughts on Google right now?
I think the very short version is it's the same fears as every other quarter that still hasn't happened yet. And people are going on, what if this happens? What if? ChatGPT, Perplexity, and all these other things were still there in Q1, and the revenue still went up. And even if it plateaus, Google Cloud, YouTube, Android, those will still grow. You have Waymo, which isn't even being valued in the company. It will still be fine. And even if on a crazy scenario where search starts to generate less revenue, the rest of the growth could offset it. And let's just say they have a year or two of flat revenue. They're still generating over $100 billion of net income and will buy back so many shares, it won't matter. And they'll pull an Apple and manufacture earnings. And the stock will probably at some point go up because of how cheap it is. Right now, the sum of the parts, it's like GE. The sum of the parts is worth more than the company. I mean, think about how bad GE was, spins off healthcare, does a few changes. Now look where it is.
So can we talk Google and also Apple with the Apple news that came out and sent Google plunging in the after hours, Steve?
Sure.
Okay. And then I have one more piece of news on this end. Tanner, I did see a couple of people asking about Shift 4. Do you have any immediate thoughts on Shift 4? Anything change for you with earnings?
I don't even think earnings was this week. I think it was last. No, nothing changed. They continue to execute. I'm a happy shareholder. I think that, they won a bunch of really big contracts. Yeah. It's a little bit different without Jared there. I mean, it was definitely a sad earnings call to listen to, but overall, nothing wrong.
And the other piece that I wanted to get into was this little fintech startup, Palantir, had some fintech news
Come on.
that came out. No, seriously, throw this up. XAI, that is what you think it is. It's Elon Musk company. TWG Global and Palantir unite to redefine financial services through enterprise AI. And it was pretty interesting because this is actually very financial focused with this partnership. There's a lot here, but specifically a lot about AI agents in the finance field with governance, agent suite as well, agentic workforce, which was modular AI agents tailored to specific business processes, deep focus on orchestration. And a lot of it really does seem like it's targeting the financial aspect. So I thought that was interesting. AI agents are one of those themes of this year, in addition to stablecoin. And I wish this kind of thing, like this is one of the things that's frustrating about SoFi. It's like a lot of things are great for SoFi. The tech platform is not. And I was hoping Galileo would be something like this, where they would be involved in partnerships like this, helping develop AI agents, in this financial sector. And instead, you have, Palantir, XAI, TWG Global. You have PayPal, by the way. PayPal has a lot of AI and AI agent stuff coming out in their developer days and announcements leading up to and even afterwards. And Galileo, you don't have anything really. And I know it's not a one-for-one business, but it's like, man, missed opportunity.
Yeah, definitely. I mean, we haven't seen a large, any one of those thesis changing cool things from the tech platform. So that was definitely disappointing. But this also feels this feels like whenever Facebook entered the payments game with Paxos, and they were like, "Oh, everyone's like, oh, when Facebook starts getting into payments, it's all over," and then that got canceled within just a couple months. I mean, XAI, wants to get into financial services, I think that they should launch it on X first. I mean, X Money, we're still waiting on that. So right now it's a prove it to me situation. I have, not that I have no faith. I'm not betting against those companies, but I'm not like, oh, this is going to change the game because 3 companies with large names say that they're entering a space.
Yeah,
Good luck.
it's just kind of interesting. And we'll have to see kind of where it goes. But there's a lot of activity in this sector. And I still think, despite all the turbulence, like one of the themes at the very beginning of this year, and many fintech companies, including SoFi, were saying essentially the same thing, that the macro was very favorable, regulation was very favorable. They call it fintech spring. Noto had said this is like the best macro in the 7 years that he's been with SoFi. I think that continues, and I think we see more of that, especially if more of these trade deals are announced, macro settles down, markets move higher, and it'll lead to a lot of interesting partnerships like this. And I think SoFi will be involved in some of them too.
Did you see Visa's thing that they launched? The AI commerce thing where they'll allow AI agents to make transactions on their network?
Yep.
I thought that was pretty interesting.
Yeah, PayPal's kind of doing some of that too.
Yeah.
Even Block is doing some interesting things with AI. The Goose project, although it's Dorsey's, I don't know. We won't go into Block, but there's a lot of interesting innovation and opportunity here for a lot of companies. So we'll see who iterates the best.
But also just interesting from an AI perspective. You know, like I want to find plays that are betting on AI in general, and the more parts
You
of
should
the
have bought Palantir then.
I mean, I had Palantir in single digits.
Or
the
PayPal.
problem was
Like,
me selling it.
I'm not even kidding. Like, check out some of the recent AI tech press releases and comments, and then their developer day, which is it's too long, but you can look at certain parts of it. Not all of it's like, wow, this is amazing, but a lot of it's like, man, this is not. PayPal has classically been behind for a long time, and this is one of those areas where like they're actually ahead for once, despite what the stock is doing. So. Not saying that they'll be winners in the space at all, but they're doing some very interesting things. So, and they're not like waiting. Okay, yeah, now that everybody's proven that it works, let's get into this 5 years late. So,
yeah. Yeah, I've got. Maybe we'll keep some comments about CoreWeave and all that stuff for the after hours. Do you guys want to transition over?
Yeah, let's talk some Google and Apple, especially.
Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But we are heading into the SoFi Weekly After Hours show. This is a member-only show. If you guys want, go down below. If you're already subscribed, there'll be a join button. Hit that join button, and you can join us in the SoFi Weekly After Hours. They'll be posted tomorrow. So it's not live, but it'll be posted tomorrow. Thank you all so much for watching. Really do appreciate your time.
Sorry, I was on mute. Have a good night. Bye for now.